Here are a few things to keep in mind if you do decide to engage in Forex trading. Number 1. Develop a trading plan. A trading plan should outline your strategy for entering and exiting trades, as well as your risk management and profit targets. Your strategy should be based on your analysis of the market, including technical and fundamental analysis. You should also consider your trading style, such as day trading, swing trading, or position trading. Number 2. Educate yourself. Forex trading is complex and involves many factors that can affect currency prices. It's important to educate yourself on the basics of Forex trading, including currency pairs, pips, leverage, and margin. Technical analysis involves analyzing price charts and indicators to identify potential trading opportunities. Fundamental analysis involves analyzing economic and political developments that can affect currency prices. Number 3. Practice on a demo account. Many Forex brokers offer demo accounts that allow you to practice trading with virtual money. This is a good way to test your trading strategy before risking real money. A demo account can help you get familiar with the trading platform and its features. Number 4. Manage your risk. Risk management is crucial in Forex trading. Always have a stop loss in place to limit potential losses. A stop loss is an order that automatically closes a trade at a predetermined price level. You should also consider your position size and use leverage responsibly. Never trade with money you cannot afford to lose. Number 5. Stay up to date with news and events. Economic and political developments can affect currency prices. It's important to stay up to date with news and events that can impact the currency market. This includes monitoring economic indicators such as GDP, inflation, and employment data, as well as political developments such as elections, trade agreements, and geopolitical tensions. In summary, Forex trading requires knowledge, discipline, and risk management. It's important to educate yourself on the basics of Forex trading and develop a trading plan based on your analysis of the market. Always use a demo account to practice your strategy before risking real money, and manage your risk by using stop losses and position sizing. Finally, stay up to date with news and events that can affect currency prices.